Good morning and welcome to this weekly market update from AGM Markets. Today is the 8th of March 2013. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, dollar yen and gold. Basically just review what's been going on this week in the markets and just go through the setups that I'm looking at personally on each of these charts. So we're going to go through Euro dollar, cable, dollar Swiss, dollar yen and gold. Won't be making any trade calls or recommendations in this video. If you could please read our full disclaimer on our website www.agmmarkets.com. For any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple moving average, the blue is a 100 simple moving average, and the gold one is a 200 simple moving average. Okay, and let's have a look at this euro dollar chart. So what's been going on the last couple of weeks? I think we spoke in last week's video. We had this trendline resistance that got broken, and you can now see, if we zoom in here, you can see how previously it was a support level, and now we've broken it. Then we broke below it on this big red candle here. You can then see it came back up, and this support then acted as a nice resistance. You can see we've come back down here. And now we're below this 100-day moving average. This is new, the mini sort of resistance level here on the euro dollar. You can see we had a nice bullish candle there, but it closed just below the 100-day moving average. And then the next candle was a nice bearish engulfing, and we slid down for the next few candles. But now you can see yesterday's daily candle was a nice bullish engulfing pattern, and it looks like that the euro dollar wants to come up and test this 100-day moving average, which is now at around the 1.3177 level, and above that we have the 55-day moving average, which is at 1.3291, also coincides with that trend line there. But now that trend line's sort of obsolete unless we do pop up and test there. It's all about this downtrend, and if I'm just going to flip it to the 4-hour chart here, so you can see it a bit clearer. We have a downtrend resistance from these highs up here, and you can see the second big high there around this level here, and this is the key focus for me, is this downtrend resistance. You can see the euro dollar starting to pop up a bit, so if it does come up, then keep an eye on this trend line resistance, and also with the 55 bar moving average just above it, that blue one, just above that trend line, so it could act as a nice sort of confluence level of resistance. But that's the key focus really on this. I mean, we've gone for the daily and the 4-hour. It's the similar sort of chart really, in terms of it's all about the trend line. If we flip it to a slightly shorter time frame, the 1 hour, we won't go any lower than the 1 hour because we're getting very, very short-term charts here. If we draw a fib from those highs, you can see to the lows down here. The lows are 1.2965. You can see we had this 50% retracement, which is the key one that I personally look at. The 50% is 61.8 for a nice sort of healthy retracement. The 50% stands at 1.3139, so we can say 1.3140s there. And we're just shy of that in a minute, but if we do come up, then keep an eye on that, because I wouldn't be surprised to see sellers coming in at that level there, because that's a key level, the 50%. But yeah, that's basically how I've got my chart set up. So if you look at the 4-hour and the 1-hour and the daily, that is how I've got my chart set up, and I think that's what's the key thing in the markets. We're now in a downtrend, so it's all about if we do come up and test that trendline resistance or the 50%. But if we get above the 50%, then it's all about what happens at that trendline resistance. Okay, let's have a look at the pound dollar chart, otherwise known as cable. Cable's just been really just selling off really for the last sort of few weeks since the start of the year really. We really have just really started to sell off very aggressively here, and yeah, I mean it's all about just personally for me, I'm only interested if we get a decent retracement. It is personally, in my opinion, due a healthy retracement. There's nothing stopping it going down, of course. But if we do start to get a pop up, then the first level of resistance is this 55-day moving average, which stands at the 1.5626 level. And also, if we draw a Fibonacci retracement level from the highs up to the lows here, let's say that this is bottoming out maybe, then the 50% comes in at one spot 56.81. So that's the daily chart. You flip it to the 4 hour, then you have the trend line resistance here from those highs to that low there, and also you can see the 55 bar moving average is coming in just around this trend line resistance as well. So if we do start to get a nice bounce today, then keep an eye on that. And if we flip it to the 1 hour chart and zoom in a bit, then the highs, that key swing higher there to the lows there, the 50% retrace, which in fact was a previous, you can see that we've already had that this week actually. You can see from the highs to the lows there, we had a nice bounce up there, and purely to the pip you can see that price touched this one spot 50.83 level and came back down, but we're now starting to come back up. We've had an hourly close above the 55 bar moving average, then you've got the 100 hour moving average there at one spot 50.67. If we do come up, then keep an eye on that 50% again, because that was a key resistance level previously. That happened yesterday actually. We had a nice reversal pattern there, a nice upper wick, but that's literally tested it to the pip. So you can see that people have had like pending orders in at that 50% retrace level. So yeah, keep an eye on that. That's how I've got my my chart set up personally. I mean, there's no really key sort of buying opportunities in my opinion, apart from obviously the key support. This support level here, which is people have already coming at one spot 49.80s, but in my opinion it's due a nice healthy retracement, but of course nothing's stopping it coming back down. But no, very technical that, especially that fib level there. I'll definitely keep that up in the charts personally, because that's obviously a key focus point that traders are looking at on their charts. Let's have a look at the dollar Swiss chart. This is the daily. The first thing I'd personally draw up on this daily chart is the Fibonacci retracement tool from that key swing high there down to the lows here, and you can see we're just shy of this 50% retrace at 0.9495. You can actually we had a daily candle. If we just zoom in a bit here, the 200-day moving average was looking at the key sort of resistance level there. We had a nice daily candle close above that, so I wouldn't be surprised to see it come and test this 50% retrace level, which is also previous resistance. If you look to the left of your charts here, you can see a nice key resistance level there where it got capped at the 100-day moving average as well. But that 0.9495 definitely key resistance here on this dollar Swiss chart. If you flip it to the shorter term time frames, i.e. the 4 hour, then you've got the trend line resistance up around. You could bring it in a bit, maybe. Depends how you like to trade it. Depends how you like to draw your trend lines. That's had a key, quite a few tests there. So keep an eye out on that. It's kind of forming a head and shoulders pattern here. Actually, you can see the big head there, a mini shoulder there, and the shoulder on the left. So it's looking a little bit bearish actually. If we break that sort of neckline, in fact, you can see it's a bit clearer on the 1 hour. Yes, you've got the head there, the left shoulder here, and the right shoulder here. The neckline, people would say, would be this here. So we break that, they wouldn't be surprised to see it really tank down towards this trend line support. And of course you've got the 100 hour, the 200 hour moving average there on this 1 hour chart. So yeah, interesting chart that. I mean, the 4 hour and 1 hour, what it's really about, really. I mean, of course that we have that big daily Fibonacci retracement support, that 50% level at 94.95s. But in terms of shorter term, that's how I'd really keep my chart set up. We are in a decent uptrend here on this 4 hour, which is clear to see from that trend line support. So if we do come down, that's all about test, see how price reacts at that level. Let's go to the dollar yen chart. Really bullish chart, very aggressively bullish here. We're well above the 95 handle now. I mean, we've been saying in these videos it's all about a decent retrace, but it looks like it just doesn't. Sorry about that, my computer's playing up. Looks like it's just really just flying up, doesn't want to retrace at all. So the best way to play it, in my opinion, is really just keep it down to the shorter term time frames and just buy any sort of dip here. I mean, this is the 1 hour chart, and you can see when it came down to this 100 hour moving average here, this blue one, we had a nice sort of reversal pattern there, perfect opportunity to buy. A lot of people would have bought there, and you can see it really reversed up. Boy, that happened on the 6th of March there. So yeah, now it's really just flying up. For me personally, I'd look at, if we do start to come and sell off, then what happens at this 55 bar moving average. Or what you could do is draw a fib maybe from those lows up to the highs there, but not a massively interesting chart for me personally, as it's just so bullish here in all the time frames. If we flip it to gold now, so we've done the forex, we're still in a downtrend here. Downtrend resistance, and if we draw a trendline support level, we spoke about the sort of 1540s, but yeah, in the daily, nothing massive interest unless we start to pop up here. The 55-day moving average comes in at 1641. If we look at a shorter term time frame, so maybe let's have a look at the 1 hour. Very volatile, this gold chart. Trendline support we have coming in there, and also I think we do have a trendline resistance here, which is in play. But no, it's just been very choppy really. You can see we're in a nice sort of a triangular formation here. It's all about break out of this triangle to get some real sort of momentum either side. So that's how I'd keep my chart set up. But I think there's more interesting charts out there, especially Euro Dollar and cable. Much more technical, more interesting setups and interesting levels really. But it really is just in a very choppy range here. When you saw there's a clear resistance there at 15.85, where it's just with these 1 hour candles just been spiking up and then coming back down. But no, it's very choppy, but it looks like it wants to break out, so that's how I'd keep my chart set up personally, especially NFP today. We can get some real big action here, big moves, so I wouldn't be surprised to see it break out on NFP. But no, that's done for the charts. Let's flip to the Forex calendar quickly and see what the NFP numbers are expected. So it comes out at 1:30 GMT. Forecast number is 162,000. The previous was 157,000. So we're expecting a better number there, and that has been following this week from better US data that's been coming out all week really. We've seen the Dow Jones at all-time highs this week for any of you that trade stocks. The US unemployment rate is expected to stay the same at 7.9%. So yeah, keep an eye on that. That's 1:30. The markets really should move on that. I think it'll be a very heavily focused number. Yeah, okay, that's all done for today. Hope you enjoyed this video. Hope you found it useful. If you want to have a look at any pairs, if you want me to go through any other pairs next week, then feel free to comment under the YouTube video. We'll also post this on the Twitter feed, which is at AGM Markets. Feel free to comment there, and I'll go through any charts next week for you. Okay, thanks for listening. Catch you next week. Cheers.